Hey guys, I want to show you another opening range breakout setup that we had on Senti Biosciences today. This stock went from $2 all the way to $17 in just a few short hours. So let's take a look at what happened with this one today. So this is a small cap bioscience company, low float stock. You can see that there is only 2.8 million shares in the float, which creates some supply and demand issues whenever there's a lot of hype around a company. There's a lot of demand and not too much supply. So this can create a buying frenzy that can send these prices going crazy. So this company this morning came out with some news. They have a new member to their board of directors. They have positive clinical data in phase one of their trial. They also have announced a private placement equity financing, which they got a lot of money to fund their ongoing operations. So that is definitely positive news, which is the catalyst for what we see happening here this morning. So right out of the when everything kind of started opening up here, this is pre-market action here. Before the stock market actually opened, we see this thing going from $2 to $7, and then after the open, you can see this massive volume taking place here. You got these massive 3 million, 2 million, 2 million volume candles right out of the open, but the stock isn't really going anywhere for the first 15 minutes. It's just kind of ranging between the 650s and the 770s area. And so, the bulls aren't in control, the bears aren't in control. We're just kind of waiting for somebody to take control of this stock. And this is what I look for when you get this opening range break setup. I'm looking for a move in either direction. And I'm going to trade it either short if we get a breakdown, or I'm going to trade it long if we get that breakout. And another thing that I like to look out for is massive volume. I want to see a break in either direction on massive volume. So as you can see here, we tried to break down here. The bears tried to take it down under the open lows, but really it just got bought right back up. And this was really the tell right here. This was very low volume. So this isn't a very good setup if you're going to go short because the volume is so low. But once we reclaimed and the massive volume resumed, this is your signal to jump back in, jump in long. And it's a very high probability setup that you're going to get a massive move higher because the bears couldn't take it down. And then once you get this retest and break of the high sevens, 780 area, $8 area, you see this massive 4 million share candle and this explosive move higher. So the reality is this move here happened in about 5-10 seconds. It went from 760 to 860. So you had to be really quick. The ideal entry, of course, is right around the 780 to $8 area. So if you were quick and you were able to get that $8 fill, even to the 820s, it's still a decent entry there. So when I'm taking entries, I'm always looking to mitigate my risk. Where am I risking to? Where am I going to get out if I'm wrong? And I like to set my stops at the low of the breakout candle. This is the massive breakout candle with the high volume that we talked about. So I would be setting my stops kind of in the 720s area. So getting that $8 fill and risking to 720, you're looking at about 80 cents. So I'm willing to lose 80 cents on this trade if I happen to be wrong. So when I'm trying to, when I'm thinking about where I'm going to take profits, I always like to take at least half of my position off at double what I'm risking. So if I'm risking 80 cents, I want to be looking to take profits at $1.60. So in this case, you get that massive move up into the 960s, 970s, taking half of the position off and letting the rest run to maximize your profitability. The stock again exploded higher into the 12s, 13 area. It halted. It actually halted. It was a volatility halt in the high 12s. So you really need to be taking more shares off. If you took half off into that first move, take another quarter off. And then I always like to hold at least 25% of my position to maybe get this move here. Nobody would have expected that it would have gone all the way up to where it did. But if you can hold on to some of your position, you can maximize the move and take advantage of it. So what I look for in taking the last piece off is I'm looking for the momentum to run out. And in this case, this is the area, obviously, in hindsight, we can see that this is where it topped out and started to fade off from there. But what I do is I look for the first candle to break the low of the previous candle. So you can see it where it broke out from the 780s here. None of these candles are breaking the low of the previous candle until you get up to this area. So if you're still in the trade up to here, this is probably the spot where you want to think about taking your ultimate last final position off. And that's really a plus trade setup that I look for in opening range breakout. And you don't get these massive moves every day, but when you do, it's always fun to join in on the ride. That's it.